Hello everyone, welcome back to my YouTube channel Sachin Education Hub. Friends, today we are here to focusing on IFRS 7, that is International Financial Reporting Standard 7. And this is an important standard that deal with disclosures requirement in relation to the financial instrument for the companies. Okay, and we mainly focusing on the scope of the IFRS 7, that is what is come under the IFRS 7, that is disclosure requirement, overall objective, and many other things. So started with very first thing, what is the overall objective of IFRS 7? First of all we will see about the overall objective of the IFRS 7. The main and the very important objective of the IFRS 7 is assessing the three things. Assessing the three things. What are these three things? Firstly, understanding the importance of the financial instrument in the entity's financial position. Second, nature and extent of the risk that is related with financial instrument. And the another one, how to manage these risks. So these are the three things that are come under the objective of the IFRS. Or you can also say that this is also the scope that is covered under the IFRS, and we will discuss later all these points one by one. Okay, so firstly we will focus on the significance of the financial instrument that is come under the main disclosure category. So now we are here to discuss about two main disclosure categories, which include one, significance of the financial instrument, and the another one is nature and extent of the risk. These are the two things. Now we will discuss about these things one by one. So firstly we will focusing on the significance of the financial instrument first of all. So what are the significance and what we show under these things, what we have to be disclosed under this thing? We have to be disclose the information about three things under the significance of financial instrument. What are these three things? Firstly, the classes of the financial instrument to be recognized. The classes of the financial instrument to be recognized, that includes cash, receivable, payables, and various types of loans. Secondly, we have to be disclosed about carrying amount. It is a crucial to specify the amount at which the financial instruments are to be carried, right? So we have to be clearly shown about the valuations of the carrying amount, valuations of the financial instrument. Okay, the third main thing is official balance sheet arrangements. Entity must have to be disclose any off-sheet balance sheet arrangements such as guarantees, contingent liabilities, because these are the main important balance sheet items that could impact the financial position. So you have to be disclose all these things as well in our financial reporting in the part of IFRS 7, that is financial instrument, in the disclosures of the financial instruments. Okay, so firstly, in the significance of financial instrument, we have to be disclose the information about these three things: detailed classification, secondly carrying amount, and the third is off-sheet balance sheet off balance sheet items. Okay, the second main thing is nature and extent of the risk. In this case, we have to be cover the qualitative and quantitative disclosures. Entity that are obliged to provide that entities are obliged the entities are very much focusing to provide these two things, that is in the form of qualitative and quantitative manners. And what are these things, what are these type of risk that we have to be shown in our financial reporting about the financial instrument? The first main thing is credit risk. The first main thing is credit risk, because this involve disclosing the maximum exposures of the company in relation to credit risk. It should provide the information about the credit quality of the financial assets. Okay, so in the credit risk, we have to be disclose the maximum exposure that is related to credit risk, and we also have to be shown the credit quality of the financial asset by providing the information to the stakeholder in our financial reporting about financial instruments. Second risk is related to liquidity risk. Entity also must outline the maturity profile of their financial liabilities and also have to assess their ability to meet the short-term cash obligations, because this help the stakeholder to get know about the liquidity position of the company. Okay, and the third main risk that the company have to be disclosed, it is market risk. It is market risk, because the disclosure about the sensitivity of the entity profit and loss account or the fair value of the financial instrument regarding changes in the market prices, it is very important for the company to get forecasting decisions very easily, right? So with the help of disclosing of the marketing risk or the disclosure about the sensitivity of the entity's P&L, it is very helpful for the company to get forecasting about the marketing decisions, forecasting about the various another market price decisions in the future. Okay. And the last main important risk that the company have to be disclosed in relation to financial instrument is foreign currency risk, because entity have to be disclosed this risk because the exposure of the foreign risk also impact the financial health of the company, and it is also related with the financial instruments of the company. So how to mitigate that risk? Company have to be disclosed about that. Okay. What are the other disclosures that the company have to be disclosed in relation to financial instrument under IFRS 7? The another one is fair value disclosures. The another disclosure is fair value disclosures, because if the fair value of the accounting is utilized for the certain financial instrument, then the entity must disclose the valuation technique as well as the assumption that is important in this case. So if the fair value of the accounting is utilized for the financial instrument, then the company have to be disclose this fair value in its fair value techniques in its reporting, because it also help the stakeholder to get clarity of thought about the fair value of the company, fair value of the financial instruments. Okay. Second thing is financial instrument with the sale and lease back. What it means, sir? It means entity must provide the detailed disclosures regarding the nature as well as extent of the transactions that is related with the sale and the lease back of the financial instruments. If we take the financial instrument at lease, or if you sell the financial instrument, then you also have to be disclosed about the nature as well as the extent of the transaction that is related with these things. Okay, so this is also the important thing that have to be disclosed by the company in their financial reporting in relation to financial instrument. The second last thing is hedging activity. If the hedging account is applied, or if the company uses the hedging accounting or the hedging technique, then the entity must disclose their accounting policy. Then the entity must disclose their accounting policy for the purpose of hedging instrument, and also evaluate the effectiveness of the hedging strategy. So you can say that if the company is involving in the hedging activity, then the company have to be disclosed about their accounting policy for the purpose of hedging instruments, and also have to be evaluate the effectiveness of the hedging strategy that is used by the company. Okay. And the last point is transferee financial assets. When the financial assets are sold but not de-recognized entirely, then the information about the continuing involvement with the interest with the transfer assets should be disclosed. You can say that entity must disclose the information that is related with the transferee financial asset, because once the financial asset of the transfer is sold but not recognized entirely, entirely word is very important, not entirely, then you have to be disclose that asset in our financial reporting in relation to the financial instrument. Because so you can say that whenever you are talking about the financial instrument, you have to be disclose all these things in your financial reporting for the purpose of better decision making for the stakeholders, whether it is related to nature and extent of the risk, whether it is related to the significance of the financial instrument. All these important points should be disclosed in your financial reporting by the company, because these things are very much important to take the better decisions about the financial health of the company. Okay, so I hope a detailed explanation about the IFRS 7 will help you to get more knowledge about this standard. Okay, so this is all for today. If you want any type of commerce subject notes, then go to our Telegram channel, and the link of our Telegram channel is in the description box. So thank you so much. Have a very nice day. Don't forget to like, share and subscribe our channel for the further updates. Thank you so much. Have a nice day.